This here, my friends, is an example of an A+ setup. Some of you guys may think something like this is luck or it doesn't happen much, but I take trades like this all the time. It was planned using our ATM model. For those who may not know me, I'm Quan. I've been trading for over 6 years now. I've seen my trading career change tremendously after finding the ATM model. In this video here, I just want to break down exactly what the ATM model is, give you a few examples of setups of it so that you can now trade the markets with confidence and go from unprofitable to consistently getting paid out. So I can't wait to share that with you guys. Before we get into it, make sure you guys like, comment, and subscribe, and let me know what other trading models that you would like to see from me. Without further ado, let's get right into the video. What I want to do here now is show you a few examples of the ATM model, but first I want to give you the elements that make up the ATM model. As long as you have the elements to an ATM model, you can apply this to any time frame. It doesn't matter if it's a 1 hour or a 1 second chart. It can be used the same way, no matter what. You can think of the ATM model as a very elevated break and retest idea. The difference between the ATM and a break and retest idea is the emphasis on time being a very important factor. First element that you would like to see for an ATM model is some sort of engineered liquidity. I want you guys to think of engineered liquidity as a place that price has to come back to. These places like to get used as a magnet. Some examples of engineered liquidity are equal highs and equal lows, or highs and lows before a key level in price. So as we look at my chart now, this is the NASDAQ, and as you can see here, we have a large set of equal highs. This place here is what we know as engineered liquidity and the perfect target for traders that want to go long back up to this area. So now that we have our target in mind, we need to get into the next step of what the ATM model is. The next thing that you want to look for is some sort of key area hit. Now, when it comes to some sort of key area, you preferably want to look for some sort of higher time frame liquidity or a higher time frame gap. So in this trade example here, we have some very clean lows right here. This here is the low of pre-market, which is a very important level going into the New York open session that we're in now. So for this area to be hit, this is considered some sort of key level being hit, meaning we need to look for some sort of reversal here. So as you can see here, we take this low out immediately. Now we need to wait for our last step of the ATM model. So now that we have our key area hit, the third and final step of the ATM model is to wait for the trigger. All that the trigger is the entry criteria for the ATM model. Because now that we have the opposing side of liquidity engaged, we don't want to just jump in just off some sort of lows being taken out. It definitely greatens your chances when you have some sort of confirmation that's letting you know that price is ready to go higher. ATM model is so lethal because it allows us to get into price at a place right before the volume kicks in to take us to our target. So as you can see here now, we made a new low, meaning that a close back above this area here would be our trigger in our ATM model to get in. So to explain this area here, think of it as the break and retest idea like I was telling you about earlier. These two up close candles helped us form this new low. So getting a close above this area here is letting us know that price has turned bullish and ready to move towards our upward targets. So this is where the patience comes in for you to wait for a close above this area and then attacking. So as you can see here, we get a close above this area here now. We're now ready to take the trade. There's a few ways you can attack this, and this is all up to you. You can get in off of the close of this candle here and go ahead and trigger in like this. So boom, let's just say you trigger in like this. Your stop will obviously be at the low. Or you can wait for a tap of this area, which may not happen as much as you think because, like I said, the volume usually picks up after the ATM is formed. You are running the risk of missing that trade, however, to each his own. Depending on how price is moving, I may get in on this first entry here and then add if we were to come lower and actually tap this area. Honestly, for me, I just like to use this as a signal that we are now bullish. So anything lower or any PD rate in this area, I'm gonna get in. This now creates a perfect opportunity for us to also use a fair value gap as a way for us to get in. Now we have a fair value gap overlapping our ATM model. This is the A+ setup. When you see things like this, you want to be a little bit more risk on with your trade. You can see here, we get to dip into this area here and immediately start taking off. As long as we stay within this area of the ATM, it is a very good sign of us continuously moving higher. And as you can see, our target was hit not too far after that and kept going. So just to refresh you guys, the engineered liquidity, some sort of equal highs or equal lows that you can target. In this instance, we had a lot of equal highs forming right before 9:30 open. Next, you want to have some sort of key area hit. Us using pre-market low to reverse was the perfect opportunity. So now that we have our target in mind, we have our opposing side and key area hit, we needed to wait for our trigger. Our trigger were these two up close candles, forming a new low, and then getting a close above that area. I really just wanted to use this example here to show you guys how you can make your ends meet without having to do so much. A lot of us tend to put emphasis on these large risk to reward moves when there's 1-to-1s, 1-to-1.5s, and 1-to-2 risk to rewards all day, every day. Just imagine taking a trade like this with a good amount of risk and making a good 1-to-1.5 on it. So this was a great buy example of the ATM. Now I want to show you a sell example so that you can see that as well. All right, bet y'all. So I'm going to show y'all a sell example of the ATM model as well. So just think of everything that we just talked about, but the opposite. So as you can see in this instance, we're leaving equal lows and then we're running straight higher, right at 9:30. This is a great sign that we're about to make a Judas swing. Because think of it like power of three, which I'll get into in another video. If we're opening and going straight up, there's a good chance that we're just making a wick. Because more times than not, every candle has a wick to it. So for an important time like 9:30 to not have any price below it, it's a great sign of us coming back to it. So for them to leave equal lows as well, this is a great area for us to target. So we have our engineered liquidity. We have equal lows, and we have 9:30 open. Now we just need to wait for some sort of key area to be hit on the opposing side. So as you can see, we just ran straight up and there's nothing really in this area for us to target. So that is when we have to look to the left. If you pay attention closely and look at the bottom, this is Friday's high, which is a great area to try to do something at. Because as we know, the most important liquidity levels are daily highs and daily lows, especially if you're a day trader. So we want to see what type of reaction we get at Friday's highs to determine whether it'll be a good sell for us or not. And look at how fast this run happened. This is a great example of a Judas swing. Now that we have our liquidity in mind, we have our key area hit, we just need that trigger. So as we can see here, it'll be a close under this down close candle here. The reason why it'd be here is because these up close candle coupled with this down close candle here forced us to rush through Friday's high. So a close back under this area here, specifically this yellow line, would be our ATM. And as you can see here, we get a move to it. Now, just because you've taken the time to watch this video, I'll give you guys a little sauce and how I was able to capitalize before we got a close under this area here. So obviously we have these two bearish gaps here. Pay attention to the time though, it's 9:44, meaning we're about to start a new 15-minute candle, specifically 9:45 15-minute candle. So if we're thinking that price wants to go lower, think power of three, meaning for every bearish candle we open, we go higher to some degree, then we start to make our range to go lower, make our low, and then we close off the low, something like this. So if we apply this logic to the next 15-minute candle, we need to get in above 9:45 open price. So as you can see, as 9:45 opens, we get a nice move higher, still within this gap. So this is where the ATM can get a little bit more advanced. However, I feel like you guys are ready for it. So boom, with us taking this high out, now we can use this down close candle as our ATM to get in a little early. Because think of this as its own little range here. These up close candles form this new high of this move here. We made a short-term high. So if we get a close back below this area, this can also be used as signs for us to go lower. So boom, as we're getting a close toward this candle here, I knew that I didn't have to wait for here to get in. So I got in right here. So you can short this idea here. You can have your stop at the high if you want to be safe. And you can at least go for 9:30 open price, but we have our engineered lows and our original target in mind. Obviously, this is the risk to reward we all been waiting for. So yes, you can also catch these type of opportunities as well with the ATM model. So now that we're triggered in, as you can see, price dumps immediately. But if you look closely, there was another chance at the ATM model, just a little lower. Look at this trade idea here. We still had our target in mind. We had a key area hit. We had a nice gap hit, first gap of the 950 macro. That's some real sauce for you guys there too. However, this was a very important gap that was hit right here. And as you can see, we got a great reaction from it, and then we get the close below, creating our trigger. So this is our ATM model here, meaning all we have to do is wait for that tap, boom, now we're triggered in. This is the criteria for the trade. Stop will be at the high, and our target can still be that low. And as you can see here, absolutely perfect. I promise you guys, this model happens all day, every day. One of the best models that I've ever found. So now you guys have some great sell examples of the ATM model as well. So if you guys are newer and looking for a trading strategy, I know that the ATM model could be the one for you. Because the more that you continue to see it, the more that you continue to use it, the more you'll be able to trade with it, meaning the more successful you'll be. Now I wanna keep it real, y'all, on this channel. All strategies work, whether it's support resistance, break and retest, ICT, the ATM model, they all work. But it just matters that you, the trader, sticks with one model. Because the more that you bounce around, the less focus you'll have with actually perfecting something. I know you guys know the saying of the jack of all trades is the master of none. But I have a better saying that says specialize before you generalize. You want to master something before you start branching out. So no matter if it's the ATM model or not, hopefully it is, but you need to pick one model, you need to pick one strategy and stick with it for the long run. I could sit here and flaunt how profitable the strategy is, 100% win rate, whatever. But the truth of the matter is, every model has its faults. However, it's up to you to manage risk well and for you to exercise emotional self-control during those losing periods. Long story short, if you do end up picking the ATM model as the model that you want to trade, make sure that you stick with it and trade it for a while. Obviously, you know I would never leave you guys hanging. So in the description, I actually have an ATM model checklist that gives you all the steps and allows you to make the decisions for yourself. I'm gonna show you what that looks like now and how you can use it. So as you can see here, first thing is there's some sort of clear draw on liquidity, like we talked about in the video, engineered highs or lows. So if there is, you go to the next thing. If there's not, there's no trade. Plain and simple. Is there a key time for the asset? Has price hit some sort of higher time frame PD array? That is the key level that we were talking about. So is there highs and lows being hit? The good thing about the ATM model is even if there isn't some sort of PD array being hit, you can still take it. You would just have to lower your risk. But let's just say if you said yes, then we get to that change of delivery or that trigger that we were talking about. And if everything lines up, you go ahead and take the trade. Hopefully you guys can use this tool to at least get you accustomed to how the ATM model works and to make sure that you're taking it correctly. Once again, this will be in the description down below so you guys can use it. I hope you guys found this insightful. I hope that you guys can use the ATM model to make as much money as you would like to in the markets. But that'll be it for this one. Make sure you guys like, comment, and subscribe. We are almost to 100 subscribers, so that's great. And we're going to keep growing from here. I can't wait to grow with you guys here on YouTube. With that being said, I hope you guys enjoyed the video, and I'll see you guys on the next one.